Welcome back, folks. So in this video, we're going to give you the whole backstory of GameStop and essentially how did this all happen?
GameStop situation is the craziest I think I've ever seen.
We have some breaking news right now on what has turned into the soap opera and saga of the markets right now, and that is the story of GameStop.
So really the backstory here, GameStop as a company was really knocking on the door of bankruptcy. With the likes of PlayStation 5 and Xbox coming out with these digital consoles, there was less demand for, physical PlayStations, physical games, and therefore less need for, GameStop. And what happened was two large hedge funds on Wall Street, namely Melvin Capital and Citron, seen this as a prime opportunity to short the company or short the stock. And for those of you who don't know, shorting is essentially where you take a stance that you're betting against the company. So essentially, you buy the stock at a certain price and you want basically the stock to decrease in value, and the difference from where you bought to where you sell is your profit. So essentially, you want the company to do poorly as opposed to doing well. So these two hedge funds jumped on board. I think at one stage the short interest on GameStop was 150%. So it's probably the most shorted stock on the US stock market. And what happened was a small group or a subreddit group essentially got wind of this. And this started producing Reddit threads and memes around encouraging investors to buy GameStop. And it was essentially really a middle finger to Wall Street, and particularly these two hedge funds. It became really the internet or retail investor versus Wall Street. So what happened was there was a huge wave of Redditors, and you can see here, guys, just this chart I've got in front of me, just the magnitude of the growth and how quickly it pumped from such a small price up to, high valuation. Melvin Capital and Citron withdrew their short positions and took heavy losses right across the board. And really, this was a similar concept to those of you who might have seen the movie The Big Short. And it was essentially where hedge funds were jumping on board and they were all shorting against one stock in the hope that it would sort of go belly up. What this huge wave of Redditors that were pumping the stock of GameStop, what that led to is something called a short squeeze. Now, in a short squeeze, as I said, it's completely different to a long-term investor where you want the stock to increase in value over time. So you buy at 20, you hope it goes to 10, but what actually happens, the stock goes from 20 and it goes into 35. So that has increased in value, which means you're at a loss. So what happens is you therefore are margin called, or your broker basically buy the stock back and you realize that loss. And so in turn, what happens is these Reddit investors are pumping the stock higher and higher and higher, which therefore leaves these hedge funds in a terrible position where they'd hoped the stock was going to drop in value. It actually soars in value by, as I said, 1,700% in some instances. So they then have to cover, which is a short squeeze. So they sell the stock at a higher price, which means they're taking a loss. And by selling, they're also it's a domino effect. The stock price continues to head higher and higher and higher. And that's essentially what a short squeeze is. Now, what also happened was the reason these Reddit investors became so successful was really because of greater access to the internet and also greater access on online brokers. You then also look at some of these online brokers, such as, Robinhood and TD Ameritrade, where it's actually free commission. So it actually encourages new investors, retail investors, into the market, and a lot of them just sort of jump on the bandwagon, and it becomes so easy to make a trade. So really it was ease of access. The barriers to entry were removed, and really with COVID-19, people who would have maybe done a lot of sports or online gambling, they then just moved into the stock market. So really what we're talking about in terms of outcome is these hedge funds lost around 5 to 6 billion. Again, some of the hedge funds have actually gone bust. Naturally, obviously, Wall Street hates this. You'll see a lot of these comments here, guys. I'm going to pop up on screen, but they just hate it. They hate where the shoe is on the other foot, and as a result, there's calls for SEC investigation, greater regulation around retail investors coming into the market. And really what that resulted in some instances was, the likes of Robinhood actually halting buy orders on some of these stocks. So for example, GameStop, AMC, you couldn't actually buy. And again, a lot of these Robinhood investors therefore were impacted and actually lost a huge amount of money because they were halted from making any further transactions. So that was another fallout of all of this. Now, to be honest, there's nothing actually illegal here. The only point this would be considered illegal is if, again, these Reddit investors colluded and they had insider information. In terms of the future, it just goes to show really the power of these of the retail investor. You know, you and I, the small guys, and I think really what it's done is it's made Wall Street sit up and realize that there cannot be market manipulation where a number of these big, large hedge funds sort of jump in and create a huge short interest in a particular company, like we've seen with GameStop. And again, like the movie The Big Short, over many years, guys, really what it has been is Wall Street has always had one up on Main Street, and this really just turned the lid on its head. So where we are now, you can see here, folks, so you can already see there's been a fall from grace from the initial highs of GameStop. Personally, my recommendation would be to stay well clear of these stocks, any future pump and dumps. You're seeing it now in the middle of sort of February 2021, where, some of the cannabis stocks are also making a lot of money. But personally, these seem to be pump and dump. So I would recommend to stay well clear of them, because you don't want to be seen to be a bag holder when these stocks do eventually sell off. Um, these are classic signs of a stock market bubble, which ultimately, if we look back in history, resulted in a correction. We're talking maybe 15 to 20%, in my opinion. So it's just something to consider, maybe trimming some of the positions or some of the positions you've got open in maybe some of the big tech companies, some of the EV sectors, and some of the hot stocks at the minute, and potentially look to hedge against it with entries into gold, Bitcoin, silver, copper, things like that as a hedge when there's inflation and the risk of a market sell-off. So listen, I hope you really enjoyed the video. If there's any questions, please feel free to leave them in the comment section. Again, and as always, please subscribe for our next video. Thanks a million for joining us, guys.